Let's turn back to Rivian. Shares are moving between gains and losses after a miss on the top and bottom lines. The loss per vehicle was nearly $40,000 per car. That's versus about $30,000 per car in the same quarter a year ago. Joining us now in an exclusive interview is Rivian founder and CEO RJ Scaringe, along with our own Phil LeBeau. Phil.
Thank you, Morgan. RJ, it's good to be down here in Normal, Illinois.
Yeah.
Look, Morgan set it up there. You guys had a wider than expected loss in the third quarter. You guided to a wider than expected loss for the year. You're trending in the wrong direction in terms of loss per vehicle. What happened?
Yeah, I mean, this is our core focus is on driving towards profitability. We talked about our objective of getting to positive gross margin in Q4. Q3 is really a hard quarter to see through a lot of the noise. We just made a big changeover to our second generation of our R1 vehicle. And so there's a lot of costs associated with changing out roughly half of the bill of materials as measured by cost. And so as we brought on new suppliers, there's expenses associated with that. We also had a supply chain shortage as part of this ramp up, and that really hurt us in terms of our overall output for the quarter, which affected us in terms of fixed cost absorption across all the different vehicles. But we remain optimistic around overall performance, and looking at Q4, we've continued to guide towards positive gross margin.
How do you get there? How do you get to positive gross profit in Q4 after the losses we've seen?
Yeah, I mean, one of the things when you've got so many different changes, we've talked about how do you sort of decipher that and look through the noise to see what's the real signal. The thing I'd call out is if we look at Q4 of this year, so this quarter, relative to Q1 of this year, and look at the difference in our material cost for the vehicle, we're 20% lower in Q4 than we are in Q1. And that sort of helps you see through some of the noise. So we've made real progress in terms of the overall material cost structure on the vehicles. And then, of course, we're continuing to drive efficiency improvements into the plant. We're continuing to drive progress in terms of the quality of the plant and the hours per unit.
RJ, it's great to have you on the show. I'm going to ask you the policy question because we just came through this election. We know President-elect Trump on the campaign trail has been very vocal about scaling back the IRA subsidies to the extent that he can. But the flip side of that is he also has one of the EV pioneers, Tesla's Elon Musk, in the mix with the administration. So what do you expect to happen where the EV investing environment and those subsidies are concerned?
Yeah, I mean, as we think about developing our future products and even our existing products, the most important thing we can do is make sure that the vehicles themselves are really exciting. They have great features, the performance, the capabilities, the value proposition is really strong. And so as we look forward, we're excited to work with the new administration, but really our focus is making sure the vehicles really compel customers to make the switch from internal combustion into electrification.
RJ, you are going to still haven't closed your joint venture with Volkswagen, worth up to $5 billion. Do you have the capital right now to get to R2 production in 2026?
Yeah, we've said before, for us, the joint venture is something we're really excited about. We've got a really great relationship we've built, across the various levels within Volkswagen, but importantly between myself and the CEO of Volkswagen Group as well. And so that relationship we're excited to see come together in the fourth quarter and be able to announce that. But with that relationship in place, plus the $6.7 billion of cash we have on hand today, that funds us not just for the launch of R2 here in Normal, but it funds the build of the R2 platform, which underpins both R2 and R3 in our Georgia facility and takes us to positive free cash flow.